This episode is brought to you by Suzy, a cutting-edge market research software platform that empowers some of the biggest companies in the world, like Citibank and Procter & Gamble. To find out more about how Suzy can help you stay competitive, go to tearsheet.co/Suzy. Welcome to the Tearsheet podcast, where we explore financial services together with an eye on technology, innovation, emerging models, and changing expectations. I'm Tearsheet Editor-in-Chief, Zach Miller, and today we're exploring two critical themes in financial services: credit accessibility and financial inclusion. In a country where nearly 45 million Americans have thin or no credit files, the ability to build credit remains fundamentally broken for many. Traditional financial institutions often require good credit to access their products, creating a frustrating catch-22 that keeps many consumers trapped in a cycle of financial exclusion. The impact of this barrier is profound, and we definitely cover it on this podcast. Without access to credit-building tools, millions of Americans face higher costs for everything from auto loans to housing, and many turn to predatory alternatives that only worsen the financial situation. Innovation in this space isn't just about new products, it's about redesigning the on-ramps to financial health. And today I'm joined by Julie Szudarek, who's been serving as the CEO of Self Financial for just over a year. Is that correct?
That's correct.
Self is a fintech company focused on making credit accessible to consumers with low or no credit scores. Julie brings over 20 years of experience leading and scaling highly regulated and mission-driven businesses like online pharmacy Atida, where she expanded the business from Germany to serving 75% of the European market, and at Groupon, where she managed $2 billion of billings across 15 countries. And what makes today's conversation particularly timely is that Self recently announced a major update to their secured credit card product. Previously available only to existing Self customers, the card is now accessible to anyone with a $100 deposit and no hard credit pull, potentially creating a more inclusive pathway to credit for many consumers who have been excluded from traditional products. Julie, welcome to the Tearsheet podcast.
Thank you, Zach. Glad to be here.
Well, let's talk about you first before we jump into Self, like your path of how you took over the helm itself and entering into financial services. Maybe take us through like sort of what are you bringing in from those previous experiences to leading to Self at this point?
Yeah, so I've never done fintech before, so that was a definite new thing for me. And it's been a great, such an interesting sector with just so many dimensions and dynamics associated with it. It's also been quite a learning curve for me, and I thank my team and my board for kind of helping me on board and learn the business, and I continue to learn every single day. I think what I bring to this business is, I've worked at big companies and I've worked at small companies, and so I kind of understand, how to move fast, but also how to make a business, robust for the long term. And so I think that's some of what I bring just to the culture and to the business that we're building. I've also dealt significantly in consumer-facing businesses that really had the customer at the forefront of, what we were doing, both at Groupon, and then I ran a pharmacy business, and like customer and customer empathy were super key to both those businesses. So I think some of that has been very relevant in my time thus far itself. We are a business that truly, I think all businesses say this, but I really mean it, and I guess that's my job to mean it as CEO, but we truly have the customer at the forefront of everything that we do. It is like we are only there to make outcomes for our customers better than they were before they started working with Self, just through
how does that manifest itself, that customer centricity? Like what shape does that take?
Yeah, I think the shape it takes is it's embedded in everything that we do. It's embedded in our values. We start many of our all hands meetings and every single one of our board meetings with customer testimonials and really understanding who it is that we're serving. Because, when you get to, C-level people and board of directors, it's not we don't fit into the shoes of our customers, at least at this current point in our juncture and in our lives. And so I think it's important that we just take ourselves back to understanding our customers like as often as possible, just to have that empathy. We do a ton of consumer testing So I just brought on a new chief product officer, and we already did a lot of consumer testing, but she's like amped that up even further. And so like we do a lot of research to understand the needs of our customers. We look at a lot of data, understanding how our customers are using our products and where they're having struggles with our products or more broadly in the macro environment. And then we do a lot of education for our customers. Something like 65% of our customers tell us they like had no financial education growing up, and they really don't understand, interest rates and compounding and just all these things that can be so incredibly impactful to a customer experience. And so we have a whole group dedicated to customer and community relations, and we do just a ton of education because our goal is not just to sell a customer something and be one and done, but it's really to change habits and to change sort of the life aspects of how people use credit and think about money.
So it sounds like, the other two businesses that we did mention in your intro that you had a very senior leadership role in, I assume they had some level of customer centricity. How different is it, or how much more challenging is it to do it in a fintech company? Is it more challenging?
It is. Maybe it's, not directly like you wouldn't say finance and health are the same thing, but I think if you like think about like Maslow's hierarchy, like consumer finance,
super
your personal
important
finances,
and
your
highly
health,
regulated.
they're sort of at the same levels. So I think with the pharmacy business that I was running, I think there's a lot of overlap there, just in terms of how you have to think about the customers and how near and dear these topics are to their like just to life and to survival, So I think there's a lot there. With Groupon, the centricity probably came more on the side of the merchants that we worked with.
Right.
So, Groupon was a marketplace, like customers like you and I, and then mom and pop merchants that are like the corner shops. And I think many of the challenges that those corner shop merchants have can be very similar, like these small and medium businesses can be very similar to experiences that customers have. They are trying to pay for their goods and services. They're trying to make payroll. They don't know how to do, marketing to get customers to come in the door. So there are some similarities there as well. Sure. And for many of these SMBs, small and medium businesses, it was their longevity and their life that was coming from the business, and that Groupon could help them, get and obtain more customers profitably. So there's definite corollaries, although they're not like perfectly direct.
The financial industry depends on data, but not all data is created equal. Choosing partners who can separate fleeting trends from groundbreaking innovations is more crucial than ever. If you want to unearth what forces are shaping the industry right now, download our guide at tearsheet.co/Susie. Awesome. So let's jump into the card update. So you made a significant change to the secured card offering. Maybe you can tell us what motivated the decision, what impact you expect it to have on your customer base?
Sure. So just so maybe listeners who don't know what a secured card is, a secured card is essentially, it looks like a credit card, but you actually have a deposit that you put in place that kind of funds the card. It's a great way for people who are new to credit or who have had trouble using credit cards in the past to kind of get reacquainted with credit. And so we have had this card forever. However, up until recently, you would have needed to have one of our other products first in order to access the card. So we have a product called a credit builder account, which helps customers improve their credit history. So up until we launched this secured card, we call it Into the Wild, you would have first have to have this other product from us. We saw so much demand from customers who maybe didn't want this credit builder experience, but wanted a secured card. And so we found a way to make that available to customers directly. So now, yes, you can still come and get.
They had good credit already, and they didn't need the building part, or
they might have had like okay credit and didn't want to invest the time in building their credit with the credit builder account. So the beautiful thing about our secured card is one, it has a very low deposit requirement of like $100, and for a lot of our customers, there's no hard credit pull. So we don't go and do a credit check on you. And so that's like, for a lot of people, like the credit check, this is one of my learnings of, coming into fintech. Credit check at some point in time like to people who have trouble, that is like, it's like, the bad word that you just don't say because it is so
Hmm.
terrifying. And because there's so much rejection that people experience when they go and do a credit check and they get rejected. I mean, it's like one of my kids getting like a bad grade on a test, an F in math or something like that. It's like that severe. And
Hmm.
so the fact that we have this very low deposit, no credit check, we think our deposit's the lowest in the industry as far as we can tell. And that's super attractive to customers who are really trying to get themselves back on path with a card.
So you decoupled the credit the card from other self products.
That's correct. We decoupled it.
Okay. Um, can we talk about the customer journey? I guess how your prospects get to you and sort of the process that they go through. You mentioned that educational piece. Like, what does a typical journey look like?
Sure. So we use a variety of different marketing channels, but I think one of my like proud stats that I'll share is that um, more than 25% of our customers say they came to us from word of mouth, and so they heard about us from their friend who had a great experience and had a positive outcome using Self. So we get a lot of customers in that way. Um, we use your typical marketing channels as well. So we use Google and Facebook and Instagram, and especially on our social channels, we do a lot of our educational content. Actually brings people to us, and so they see. We have Monique, who is um, our spokeswoman, and she speaks to customers about just learning about how credit works, why it's important, and we bring a lot of customers in that way. We have a partnership with the Spurs, which is the basketball team of San Antonio,
Hmm.
and we it's hard to measure some of that marketing, but we with the Spurs have like a very shared sort of focus on customer and community, and so they've been a great partner to us. And then we work with a lot of affiliate partners who send us traffic, and so often maybe a customer comes to get, I don't know, let's say an auto loan from someone, and they don't qualify because their credit score is not what it should be to get that auto loan. So that lender might send their customer to us. That customer comes to us and gets a credit builder account. They do well by the credit builder account, which helps them learn how to save and build habits and teaches them about credit. And then they're able to go back after a period of time because their credit score is better than it was before, and maybe go back and get that car loan. So a lot of interesting stuff like that is in how we get customers, and then they come to us. We're at self.inc, and they would choose the path that they want to go down in terms of the products that we offer, and go through an onboarding flow, and then they start using the product.
And so that last piece, is there a journey within the self family of products where they may graduate from one product to another? Can you describe that?
Yeah, absolutely. So um, do you remember being a child and having these wooden, they were Russian dolls, and they kind of fit within each other, and there were maybe
Hmm.
six, and it was really cool. And so our like the product that we launched, the credit builder account, is essentially a CD that customers put money into every single month. As they do that, and they make on-time payments into that loan, it's a quote loan because they get
Hmm.
most of the money back at the end. We report those payments to the credit bureaus. And so on-time payments are one of the key components that go into your credit score. And so that is a good thing. After you have $100 saved in that account for your credit bureau, through your credit building account, then we can offer you the secured card that we've just been talking about because
Hmm.
you've saved up that $100 deposit. And it works like magic. Like you don't have to do anything else. You click a button and say, yes, I would like this card. And then lo and behold, in your mail, whenever it comes, you have a card in your box. And for many of our customers, that's the first time that they've ever had a card. And then within our like just our internal marketing and our we call it life cycle marketing, um, once you're on a product with us, we are pretty good at promoting other products to you. Last year, we launched a product that reports your positive rent payments to the credit bureaus.
Mm-hmm.
And so rent is a huge cost for many of our customers. I have
And
a
traditionally
mortgage.
hadn't been reported, right?
Hadn't been
Yeah.
reported. I mean, my mortgage gets reported. I get credit for that. But why shouldn't someone's rent get
Mm-hmm.
reported? It just feels like fair. It's a huge payment they're able to make every single month. So we launched a free version of that product, and we've had really good take on that. And after customers sign up for that, it's sort of it's getting your toes wet, and then they see positive results from that rent product, and then we're able to cross sell them to other products within our atmosphere. So it's been fun, like really being able to keep selling customers on new products that are going to really help in their credit journey and providing credit access to customers through some of these products that we have. So customers love us, and they want more from us, which is great.
It's a good place to be, especially with you, like you said, that word of mouth marketing that pays itself. So you've been CEO for over a year now, and you mentioned you made a leadership change, and it sounds like there were a variety of leadership changes in the team. I'm kind of interested in hearing what you were looking for with these key hires, and what the refreshed leadership team, how that aligns with your vision for where you're taking Self in the next few years.
Yeah, so let me start with where we're taking Self. So I have a very patient and excited board of directors, but at the end of the day, many of them are investors. And at the end of the day, their goal is to have a positive
Show me the money. Yeah.
show me the money.
Yeah.
But they're very patient, and which is wonderful, because they want the right outcome for the business and for the customer, which is really, really nice. So one of the things I noticed when I started is we were kind of limited in the number of products that we had, and customers would get to the end of their journey with us. Like maybe they outlived the secured credit card and they were ready for another, a more sophisticated financial instrument, or they got to the end of their credit builder account and I don't know, we basically just said goodbye to customers. And if you look at our app store, we have incredible ratings from customers. Customers love us because they see positive outcomes using us, but we had nothing else to offer them. And so tying together my point on our investors and the product, we think there's the real opportunity to offer more products and services to customers, to make our customers, more value from a lifetime value perspective, and while providing, incredible opportunity to these customers to just improve their stance. And so one of my first big hires was I brought in a chief product officer, a woman named Shilpa Dar, who has significant fintech experience. She was at PayPal and Venmo and Coinbase, HubSpot, and she's really come in and helping us figure out what's our strategic product roadmap that makes sense for the customer base that we have. How do we keep customers on our platform forever? If you see a lot of banks, they've had customers forever, and we should be doing the same because, I think our customers like us better than they like the average bank. So there's just a lot of stuff that we're going to be doing, and you'll continue to see us offering customers products that are meeting them on this journey that they're on. And, customers would often leave us and go get other financial products. So why shouldn't we be offering those financial products? So another one of our graduation products that we have is a unsecured credit card, which is sort of a natural graduation from a secured card. But I think you'll continue to see us doing more things like that. I also recently brought on a people leader who is just helping. We're going through, I'd say, a transformation. We're doing a lot of stuff, and we're trying to do it faster and trying to do it more operationally efficiently. And so I brought on a people leader to really help drive our people agenda forward. At the end of the day, and again, this is my job as a CEO to probably say this, but I truly mean it. The people and the team at Self, they are that's what we are. Like that's the
Mm-hmm.
key to making us successful. And so I brought Alyssa Welling on to really help us like just to drive that agenda forward. And so it's been really fun having building out a team and having new people in place and who come in with their own marks and their own kind of experiences from different industries and sectors.
Do you have specific KPIs or business metrics that you use to judge success for your team and the company?
Yes, we rolled out last year. You've probably heard of OKRs.
Mm-hmm.
And so we have company-wide OKRs that we talk about as a company and that people are rated and judged on in terms of their performance. But like sort of the high level metrics, I like input metrics. And so those are sort of what I mean by that is indicators that have future positiveness associated with them. And so the things that I like to look at are, kind of starts with like visitors. How many people are we getting to come and see us?
Mm-hmm.
And that's sort of an indication of how our marketing is working. And so that's the marketing team is judged a lot on visitors. The product team is judged a lot on conversion. So we get those people there. Marketing did their job. So how do we get them to transact with us?
Mm-hmm.
And, part of that is like, what does our flow look like and how easy is it for people to transact? But also like, what is our pricing? And so we have an analytics team that works a lot on pricing. But really it's like visitors to conversions and then to retention. And those are, really key criteria that we look at. And we have hundreds of metrics.
I'm sure.
Talk about metrics all the time, but I think those are probably three really important leading indicators for us that drive a lot of the other decisions that we make in the business.
And I have to imagine as you roll out more products like cross-selling, would be one of the things you track as well.
Absolutely.
Yeah.
Like the number of products that each customer has, how are they, we have our customer base is always under financial stress. Even when they're working with us, they're under financial stress. So making sure that we're making people, make payments for the products that they have from us is important. It's important for us, of course, because that's how we make money, but it's also important to the customer in terms of achieving what they need to achieve through self. So we do a lot of things to remind customers about payments, to make it easy for customers to pay. We recently rolled something out where we let people choose the date that they want to pay for the products that they have from us. So that it can align more closely with how they run their internal customer P&L. And so that's been a really successful feature that we've recently rolled out.
That makes a lot of sense. I'm kind of curious, this may be an awkward personal question. We see it a lot with founders of fintech companies, that there's a typically a childhood story that inspired them to like move into fintech, particularly if they're mission driven. Is there something that drives you like that?
I don't have a childhood story. James, our founder, did. But for me, I think the real key thing when I accepted this job was that I had a bunch of criteria that I was kind of looking for in my next role, and it hit all those criteria. And then like the icing on the top was that we help people that need help. And I'm by nature very empathetic, and like back to Maslow's hierarchy, like if people aren't able to like put food on the table for their kids and they're working 4 jobs, like it's just so hard. And so I love the fact that we truly are able to help people who need help achieve better outcomes, like for their families and for themselves. And it just, if we can do anything to kind of break the cycle, like being part of that is just an amazing, like just thing that makes me feel really good inside.
We have time for one last question. We're getting near the end of our conversation. I'm curious, like if the future of self, obviously you're an independent brand. Is there a model where there's collaboration with traditional institutions? Is that a channel for you?
Yeah.
Are there partnerships there? Maybe you have that already. Yeah.
That's an awesome question. And yes, it's really critical to us. So we have a pretty big partnerships group, just like I talked to you, like some of our partners send us customers, but then we also have partnerships with the likes of Regions Bank, They offer our rent reporting solution to their customer base that I talked about, and I think it fits their customer
And is that a
profile really
branded
nicely.
partnership?
It's
Cool.
it's branded. We really nice story. There's a company called Pathway Homes. I think they're Dallas based, and they help customers sort of learn how to own a house. And they kept seeing self on the credit reports of customers that were successful in their program. And so they reached out to us and said,
That's awesome.
we don't know who you are, but we think there's a good opportunity here. So we absolutely see partnerships as an absolute big key to both how we get customers and how we kind of get our name out there and help expand, I guess, the top of funnel in terms of the customers that we're able to help.
Julie, it's been great talking to you. Thanks for joining us on the Tearsheet podcast today.
Thanks, Zach.